It's Monday and time for the Back to Business podcast, featuring Calgary's industry leaders. Welcome today's show host, Kim Hayden.
Did you know that you can actually borrow against your future security for today's success? Seriously, it can be done. Our guest today, Randy McCord, is in the house to tell us how you can do this. So build today and plan for tomorrow. But first, our land acknowledgement.
In the spirit of reconciliation, we acknowledge that we live, work, and play on the traditional territories of the Blackfoot Confederacy, Siksika, Ga'aina, Piikani, the Tsuut'ina, the Eahe Nakota Nations, the Métis Nation Region 3, and all people who make their homes in the Treaty 7 region of southern Alberta.
Hi, Randy. Welcome to the show.
Hi, Kim. Thanks for hosting.
Absolutely. I know we've talked about this for a while now because we see each other nearly every month at the members mixers here at CPC.
Indeed, we do.
So I'm dying to learn more because being the extrovert, I'm usually the loudest person in the room, running more person to person. But now I get to have a whole half hour with you, which is pretty awesome.
Well, I appreciate that. Yeah, it's nice to sit down and have a chat.
Absolutely. So let's just start this off first with who is Randy McCord?
Well, that's a long story. Actually, I'm a native Calgarian. A lot of folks don't know that. So I was born and raised here. And for the last, 15 years, I've been in the financial services sector. So we have a small boutique life insurance brokerage. We're an independent broker, so we're not beholden to any companies, and we do our best to provide unbiased advice to Canadians in the areas of protection and investment. So, yeah, that's kind of the short version of it.
How did you get into? I mean, I'm guessing most third graders don't sit there and go, "When I grow up, I want to be."
No,
it's
true.
How did you end up there?
Well, it's odd. I was always an ardent investor. So to give you an example, I had a mentor when I was in high school. He was a high school teacher, and he was renovating houses. And he'd have us come down and help him. We got paid $1 an hour and a coffee break every hour. And but he'd teach us how to paint and how to pull nails and how to do stuff when we were 14, 15 years old. I think it was child labor, but there weren't laws at that time. But anyway, I would come down every weekend because I came, my dad died when I was 12, and I had 2 younger sisters and a mother, and we lived in a 2-bedroom apartment in Varsity. I went to Winston Churchill High School, so he was a high school teacher there. And so any excuse for me to get the hell out of the apartment, right, I was gone. And so he was a good excuse to get out, and I'd tell my mother, I'm going to work on a house with, this teacher. And at some point, my mother decided to live with a fellow that I didn't really like very much. And I was 16 at the time, and you know what a 16-year-old's like. So I said, no, I'm not going to move with you, across town. I want to finish high school here. And so the high school teacher literally let me live with him and his family.
Wow.
Yeah, well, because I was always there. But he became a mentor to me in a number of ways, including real estate. So with my first student loan, I bought a house. I didn't pay for my tuition. I actually bought a house. And I ended up renting it out to students. And the garage was all drywalled and insulated because the previous owner had been an auto body mechanic. So I slept in the garage and lived rent-free when I went to university. So that's my introduction to investing, understanding money, mortgages, and of course, that just continued throughout my lifetime. And I always had a side hustle doing real estate or investing or stocks or bonds or traded options in the 90s. And so this lady bumped into me. Now, my actual career for most of my life was in international transport. So she bumped into me while I was working for a large freight forwarder and said, you'd be a really good financial advisor. You've got all of this background. You've got all of this information that you use to help yourself. I said, well, what are you suggesting? She said, well, maybe you should get life licensed and, join our company. And that's how it started. Somebody just looked at me and said, I think you'd be good at this.
And what's the difference? Like, what did it bring to your life? You'd already been investing. What was it that really inspired you about the life insurance, that whole kind of investment aspect?
Well, I'm going to tell you that it wasn't the products, it was the people I met. So the 3 people that I met were running a workshop on financial planning. And she tried for 2 years, she tracked me down trying to get me to come to this thing. And finally she got me out to it, and I was very impressed. I was so impressed, I said, okay, you guys are pretty smart cookies. I could see hanging around with you guys. What do I have to do? And they said, well, you just get your life insurance license. And at that time, you could become a part-time advisor, which you still can today. And I thought, really? What's the harm? And so I signed up. And then as my corporate career became more and more untenable, when you're 25 years in the corporate world, at a certain point, you kind of get a little jaded as changes happen that don't really, over which you have no control and that may not be to your benefit. And I think everybody's experienced that who's worked in the corporate world. And eventually I just transitioned into the life insurance. We set up the brokerage and I went full time, and that's history. It's 15 years ago that happened. So
what are some of the things? I know that life insurance is not going to be a real high priority for a lot of people who are launching small businesses or entrepreneurs. They're reinvesting every dollar they make. And by the way, that $1 an hour with a coffee break from your teacher, he actually was giving you $1 an hour. Frank Lloyd Wright, one of the most famous architects out there, ran a school and had his students build his personal properties for him for free as part of their curriculum. So you got paid.
That's what my teacher used to tell me. He says, I'm actually training you and still paying you $1 an hour. So consider yourself, well served.
What is the greatest challenge you see being an entrepreneur, being a small business owner, that you see other business owners make? What are the biggest challenges or mistakes they're making in their business when they're not being prepared? Because I always think of insurance, any type of insurance, is like the Girl Scout or the Boy Scout. Be prepared, right? So I know that that's usually the first thing off for a lot of these startups. What are some things that you would advise, or insights or strategies for small businesses?
Well, I think it depends on the type of business you're setting up. But there's one thing that's common with entrepreneurs, and that's they're very positive people. They're very positive thinking people. I mean, why would you go into a venture where the statistics tell you you're probably going to fail, get an 80% failure rate in the first 5 years? Why would you enter into something like that if you weren't really positive? You've got to be a positive kind of person. Well, insurance protection products don't imply that positivity. Insurance products imply risk management, that there's risk involved, and that what you want to do is mitigate that risk. And so what I do tell entrepreneurs is I say, look, true business people are risk mitigators. They're not just wildly positive people with great visions. Now, that being said, good entrepreneurs need to have a vision. They have to have that dream that they're looking upward toward. And in fact, I've written a book called The 8-Step Dream Business Plan, because one of the issues I found with our advisors and agents is that they lacked a kind of a personal plan and a passionate commitment to their business. I mean, how passionate can you get about life insurance, right? I'm passionate about it, but how do you engender that in yourself? And so this book describes how you can put together sort of a structured kind of personal plan, not a plan to raise money, not a plan to take to the bank. It's not a business plan from that perspective. It's more of a personal note to yourself every day about, why am I getting up? What is my dream, right? What's my vision? What kind of plan do I have in place, right? What am I going to do today? What's my agenda today? What's my target this week? In fact, There are 8 chapters, right? And the reason I wrote the book is because I set this up as a PowerPoint presentation to give to our advisors, to give them a basis from which to have sort of a personal plan. And it's called the 8-Step Dream Business Plan. And it's the chapters are what is the dream? What is the vision, right? So it's a 10-year dream, a 5-year vision, a 3-year plan, a 1-year goal, a quarterly review or 3-month review, right? A 1-month schedule, a 1-week target, and a daily task list. And I just break everything down, starting with the 30,000-foot view, right down to what am I going to do when I wake up today? And I say, if you can think about your business that way, then you have a chance of succeeding. Because not only can you see off in the distance that potential, but you've also got the accountability and responsibilities of today's activity right in front of you. And if you think about it that way, that's how people in our industry have to work, because it takes a long time to build up a financial services book of business, and it's not easy. I think we were going to talk about networking and referral marketing.
Yeah.
Because that's one of the struggles we face, is that it's difficult to get new clients. And we exist in a high trust business. We're not selling jelly beans. We're dealing with
We're not dissing anybody who does sell jelly beans.
and that's fantastic, right?
But yeah, absolutely. You're dealing with very sensitive information. You're dealing with life. What at the end of the day, if this person's no longer able to take care of their company, their family, their children, whatever, that's the decision they're making with you.
Yeah, in order for us to help them, they have to surrender information to us.
Yeah.
And entrepreneurs are, not unlike most people, they're not keen on telling you about their personal finances, their personal situations. That's private. And Canadians are when it comes to money, Canadians are very tight-lipped about these issues.
Absolutely. And being from Kansas and, living the last 30 years in Canada, there is a significant difference between Canadians and Americans when it comes to early adoption of business or, that support. Does that make sense? Like, there's a lot. Well, why don't you just? They're far more conservative. They're risk adverse, right? Or
typically that's correct.
Yeah. So you would think that then all Canadians would want life insurance.
Well, I think most Canadians would like life insurance. In fact, if you said, "Hey, I'm gonna back up a dump truck and give you all the life insurance you want. How much do you want?" Well, you take as much as you could get. Right?
So what's stopping people?
Well, you've got to remember that, I've got to tell you, Kim, I'm always jealous of other people in our industry, like mortgage brokers, as an example. Because mortgage brokers, when they get a call, it's an urgent call, right? Because somebody wants to buy a home. Somebody wants to refinance their home. It's an immediate need, right? Same with a realtor. If you're calling a realtor up to sell your house, it's because you need them right now.
Exactly.
Life insurance isn't quite the same. You're going to always kind of put it on the back burner, right? It might be on the radar, but you don't need it today, am I going to have an issue? Am I going to have a catastrophic event like today or tomorrow? Probably not, right? So it always kind of gets pushed aside until usually there's some event that triggers the thought that it's necessary.
Well, and I'm shocked. I'm 55. I don't remember getting this age. I mean, I'm still in my head. I think what did they say, that we stop thinking about age at like around the age of 40. We no longer picture ourselves inside our heads getting older. And I'm going to look up that study. But it's this whole thing. So it's like, then you go into almost like this, like almost time warp. Right? And then you wake up one day and you hear from a friend that her husband has cancer and he's going to pass away. And then all of a sudden now we're in that urgency place.
Right.
Now, my understanding, life insurance gets more expensive the longer you wait. Is that correct?
Oh, yeah, for sure.
So if we were talking to a room full of 30-year-old entrepreneurs, what would you say to them? And are there financial or business advantages to having a healthy life insurance policy?
Oh, for sure. And you have to remember that life insurance encompasses a great range of services and products. So life insurance isn't just about life insurance. It's about disability insurance, critical illness insurance. The life insurance industry has group benefits and group retirement plans, health and dental benefits, as well as we sell annuities and investments. So it's a broad industry. In fact, we feel we compete directly with the banks. So we hate the banks. No, I'm just joking. We don't hate the banks. But we compete with them in almost all ways, except we don't loan money, right? And so when you look at all of these types of services, when it comes to entrepreneurship, the risk mitigation that I think there are two areas where they could really make use of the products. One is in making sure that an injury or a sickness or an untimely death doesn't destroy the business or the family. The other is, what most entrepreneurs don't understand is that permanent life insurance is one of the last tax shelters in Canada. Insurance contracts don't attract any taxation. And permanent life insurance has an investment component. There are two types. There's whole life and universal life. They both have an investment component that grows. And as it grows inside the policy, it's tax deferred. Now, if you use your corporate assets, your corporate retained earnings or after-tax profits to purchase a policy, let's say on a key person, the owner, then all of the money that accumulates inside of that policy is not taxed. It grows tax deferred. And so you might say, oh, but Randy, someday if you want to use it, you got to take the money out. Well, that's true. If you did take the money out, there would be some tax payable on it. However, the beauty of these life insurance policies is that our friends, the bankers, actually see them as very, very valuable collateral.
Oh,
and
brilliant.
you can literally use a corporate life insurance policy to leverage a line of credit to retire on.
Brilliant.
And of course, you don't pay any tax on borrowed money, right?
Yeah.
So the bank is happy to lend it to you. In fact, if these policies are set up correctly and your financial plan is set up correctly, the bank will even capitalize the interest on that loan. You won't even have to pay the interest on the line of credit as you accumulate it over time to help pay for your retirement. It's a brilliant strategy. Most entrepreneurs, though, don't consider it or think about it. And why is that? Because it's called life insurance, right? And so a lot of people are misled by there's a lot of history around life insurance in terms of bad salesmanship years and years ago, and there's just sometimes people get the wrong idea about just the term itself.
But if you're securing your revenue, your income, your career with your name, your brand, and your life's work, then being able to leverage that further, that's just good business.
Oh, yeah. I think that for many companies, it's worth considering. It won't work in all circumstances or for all companies. And sometimes even the companies need to be corporately restructured. Mm-hmm. Because if you think about it carefully, a life insurance policy is actually, if it's owned by a corporation, it's an asset. It sits on the asset side of the balance sheet.
Yep.
Well, if you had to sell your company shares, well,
it's kind of hard to sell that person with the company.
Well, no, it would go with the company.
It would.
Oh, yeah. Because if you tried to extricate it, that's a deemed disposition. That's a taxable event.
Interesting. Well, will they take your ex-husband too?
Yeah, sure.
We're selling the company and my husband comes with it.
Exactly.
I'm just giving
yeah.
every woman, every menopausal woman out there is now laughing because, we all have those thoughts.
Yeah, as long as
"I
the
love you,
husband
guys."
goes with the company.
There you go.
Ship
I'll
him
get
off
more
with the
money.
company.
I'll get more money.
Yeah. So again, this is my specialty in my industry. So it's something that I understand and can show clients how to make use of properly, because it's not a cookie cutter solution.
No.
As I say, you might need a holding company in order to extract those retained earnings, because someday you're going to sell the operating company.
Yeah.
Or maybe the operating company might get sued someday. Well, you don't want that asset in the operating company that's going to be sued. So there are structures to be considered, but in terms of a tax shelter, it's probably the last tax shelter left to Canadians, right?
Wow.
I mean, you can set up a...
And Canadians do like playing the long game. Like, they are more conservative. They're not going to be like, Black Friday here in Canada is really a non-starter. Like, down in the States, you may get beamed with a toaster diving for the last TV. Whereas in Canada, they're like, excuse me, are you, oh no, that's fine. You can have it, right? Canadians they're just by nature have a little bit of that British in them, when you think about it, right? And a lot of that is being prepared, right? And so it's interesting because it's never really been anything I've really thought about. Like, it's there, but I've never thought about all the multiple aspects of what being prepared can provide.
Yeah, and again, I don't think that most entrepreneurs give the life insurance industry their fair due, because even if you're setting up and you don't have retained earnings, you're just starting out, but you're producing revenue finally, right?
Yeah.
If you're even somewhat dependent upon that income, well, you'd want to protect yourself against injury, so that's disability insurance.
Yeah.
You might not need a life insurance tax shelter or life insurance at all. But
can
disability
you build
money,
your plan as you go along?
Absolutely.
So we don't have to have a commitment right up front.
Absolutely. You want to take steps to mitigate whatever risk is most prevalent. What is the most important risk to take care of at the beginning, in the middle, and at the end of a business? Obviously, in the beginning, it's your ability to produce income. It's you want to be able to do your job, to do the work. Yeah. So that involves sickness and injury more than it involves life insurance. As you grow and make money, well, now you have to find a place to put that money, especially if it's going to sit in the corporation. You don't need it for personal use or for operations. You want to do something with it. How do you invest it without paying enormous tax?
Yeah.
So again, we have a strategy there. And what happens when you transition out of business? If you really want to transfer your wealth to the next generation and not have to pay CRA 50% of that wealth,
yeah,
life insurance turns out to be one of the best possible tools for doing that on a tax-free basis.
Amazing.
So there's a whole spectrum of value.
And you don't have to be dead to benefit from planning ahead.
That's the beauty of the permanent insurance products, is that they're a living benefit.
Now, here's a question. I have a small startup generating $250,000 a year, because there's a lot of people in that space, right? It's a product-based company. So I have an insurance policy. Is that insurance policy, as I'm paying into it, are there tax benefits? It's, as I'm paying that money, so if I'm paying, 10% of revenue into an insurance policy or whatever that is there some sort of end of year benefit to that?
No.
No. Okay.
The short answer is no. Because the government doesn't allow you to eat your cake and have it too.
Okay.
Right? You have to
Was that my American coming out? Is there a way to have my cake and eat it too?
Yeah,
I'm just trying.
Yeah. You have to use after-tax dollars to fund life insurance, because remember, the benefit is tax-free.
Okay.
That's where the value comes to the beneficiaries. Whether the beneficiary is your corporation, whether it's your kids, your cat, your charity, your church, doesn't matter who it is, it's tax-free.
Oh, and I'm a professional cat sitter. Somebody's leaving all their money to their cat. But keep going, Randy.
Yeah,
just wanted to plug that real quick.
Absolutely, yeah. Life insurance is good for numerous things. It's fantastic for charity work, right?
Yes, absolutely.
And now there's a place where you can get a deduction for paying your life insurance premiums. So you just asked about that. That's the one place where if you make a charity or a nonprofit the irrevocable beneficiary or the owner of the policy, and you pay the premiums, you're allowed to deduct those premiums as a charitable donation. And then ultimately, the charity will receive the legacy amount when you pass away.
Can a person have more than one policy?
As many as you like.
So in theory, let's say I've grown my company to $250,000. I have 4 solid employees. Now we're ramping up or we're projecting to crack that 7 figures. Just so you know, folks, if you're listening to this small business, here's an interesting stat. Only 9% of businesses out there actually crack 7 figures. So do not think less of the impact you make on a local market if you are not doing that, because that is the truth. You're with 91% of the rest of us who are out there working daily and creating local economy. So I just want to qualify that.
That's a good stat.
And I think it's important to know these things because we all look at social media and beat ourselves up, so forth and so on. Okay, so I've gone from $250,000 and now I'm projecting I'm going to get to that $500,000 or I'm going to crank over into the 7 figures with my company. Would it be a good time maybe to look at a secondary policy? I've got the first policy, it's serving its purpose. Now a secondary policy could actually, instead of having those 2 purposes, maybe one is for, the family, personal care,
right.
And then one now becomes, okay, this business really has legs. The brand is taken off, we see companies that are doing amazing jobs here in Calgary, like Local Laundry. Like, this is a great company.
Right.
And
I've been meaning to speak to that fellow.
Connor is lovely.
Yeah.
I thoroughly enjoy, but the reality is he is truly what a small business in growth mode is. You start out, you got 1 or 2, you're building, his company's getting to a point where it's on the cusp. So somebody like that company, he's been working for himself basically up to this point. Now the company itself has legs. What does that look like? They would go and get a second policy, maybe pay it back into the company so they could, I just thinking, what is the longevity? If the owner dies or leaves, does the brand lose heart? Or can you secure the brand moving forward?
Well, I think as I suggested, one of the things to consider is if the operating company has any opportunity to be sued by creditors, or if it's going to be the shares are going to be sold, so the assets go with the sale, then that's not the place to put one of these policies. Certainly not the ones that are meant to work on a personal basis on behalf of the shareholder. You want them outside of the operating company, either in a trust or in a holdco. So that's one thing. That's one thing to set it up. But as you say, gee whiz, suddenly I'm a dentist. I've got my own practice. I've got $50,000 a year kicking around. I don't know what to do with. All these real estate people are telling me buy rental properties. And here comes Randy walking in saying you should instead buy a life insurance policy. Okay, fantastic. You actually believe what I'm telling you and you buy the life insurance policy. 5 years from now, you want to expand your business. You bring in a partner, another dentist, right? And now you're forming a company together, right, to run the 2 operations. Well, now you've got another reason to get life insurance, which is now you've got a business partner, right? Well, that's great. That's fantastic. The question becomes, and again, this is the life insurance guy saying, what happens if one of them dies? What happens if your partner passes away? What happens to the shares? Well, we know what happens to the shares. They go to the estate of the deceased. So suddenly, the spouse of your partner is your new partner.
Oh.
And the spouse of your partner may not like you in the same way that your partner did. In fact, the fact that you kept them away from their spouse for hours on end and weekends and golf trips, and they may actually not like you at all. And yet that's your new business partner.
Oh,
so once again, when companies are set up correctly with a unanimous shareholders agreement, which they should always put together with a lawyer who knows, corporate lawyer, there are all of these exigencies written down and taken care of. including what's called a buy-sell agreement. What happens when my partner passes away? Well, typically what happens is there's a promissory note that establishes a value of the company and the shares, and that promissory note is paid to the estate of the deceased. Now, how do we fund that promissory note? You guessed it. Life insurance, right?
Crazy.
So there's another example of how life insurance can be used in a corporate setting, right?
Uh-huh. So yeah, it should be literally part, going back to your book, it should literally be part of that plan, right? Even if you're starving today and barely making the bills, can you put, what's the minimum somebody in their 30s can put into a life insurance policy on average?
Oh my gosh. It's
monthly. What?
There's the minimums are so low that it's hardly worth talking about. You can probably put in as little as $50 a month.
$50 a month, so $12.50.
Wouldn't buy you much insurance, but
it's a start, and we know that habits are critical to form.
Correct.
Right. So setting up. So if I have your book and I have my daily, weekly, monthly, quarterly, 1 year, 3 year, 5 year, 10 year.
You got a good memory.
You know what though? I've been doing something very similar to this my entire business life. And because it allows you to pivot and move and grow, because Edison said, I did not fail 99 times at making a light bulb. I discovered 99 ways it would not light.
Right.
And I believe that we all have to give ourselves some grace because as you mentioned earlier, 80, 90% fail rates, well, maybe at what that was, right? Did you pivot? Did you pivot? Did you pivot? Are you going to pivot 90 times so you can get that success rate? Because I believe most people have success in them. But if you put it in that 10-year plan, I'm going to start and create a habit. It's like, I'm going to get up and go walking today.
Yeah, exactly.
I'm going to make my 5 calls today. These are eat the frog, baby. And I would think that a lot of people think of insurance as the frog of the financial world, right?
Probably.
So get up, eat the frog. Know that this is one of the building blocks to success.
Yeah, absolutely. Yeah, I always say that well, here's a story from the mentor, the teacher. This is something he taught me, and it's never left me. And he said, when you have a project, like when we had a house, we would jack houses up, put basements under them. We would add additions on them, build garages. We'd redo these houses significantly. We got really good at it. And if you had a project, and again, he said, keep your day job, dude. That's what gives you the credit and the money to be able to do these other projects and to build your real estate stuff. So, I took him at his word and always kept the day job. But his rule was when you had a project going on where you had to go and do the renovation on the house, he said, an hour a day. You got home after work, you took your suit and tie off, put on your work clothes, got your thermos coffee, you go to the site, lay out your tools, pour a cup of coffee, you look around and go, okay, I got to spend 1 hour working on this project. And he said, you can't ever miss. You see, every day, Monday through Friday, you do 1 hour. And you do 4 hours on Saturday, and Sunday, you get to go to church. And he was not religious, but he used to joke about it. You get to go to church. And the rule was 1 hour. You just had to do 1 hour.
Yeah.
Of course, when you got there and you put in your hour, and you were tired, it had been a long day, and you put in your hour, you realize, if I just spent 20 more minutes, I could finish up that last little thing, right? And so I'd arrive at the work site at 5:30 and get home at 9:30, right? Monday through Friday. And the reason that happened, because you showed up.
Yep.
You just have to show up. But the day you missed because, you didn't feel like it, maybe you got hungover from the night before, maybe you were just mad at something. The day you didn't show up was the day the project failed.
What is that saying? An object in motion stays in motion?
There you
Isn't that the, and we know
Absolutely.
that, and if we're looking at old trains, that first bit of track was the hardest, consumed the most coal. But once you started getting momentum going down that track, that train would require less and less fuel. So
Yeah,
that's
you
what
bet.
that's what I was asking about, like a minimum. If you're 26 and you've got a business you started, $12.50. Skip a McDonald's Big Mac dinner once a week and invest it into an asset that either A, will serve you in your old age, or B, will help grow your business.
Or C, pass your wealth on to your loved ones.
Yeah, if you have loved ones. So,
Well,
Randy, you
like
are
I said,
a rock star.
church, charity, cat, doesn't matter.
Yep.
Whoever you love, it's irrelevant to
Exactly.
the insurance. It doesn't care.
Like I said, I will take your cat. Randy, again, can you mention your book and tell us where we can get your book?
Oh, sure. It's called the 8-Step Dream Business Plan. Not very creative, but that's what it's called.
Succinct and to the point.
Yeah, and on Amazon.ca, you just type in the 8-Step Dream Business Plan, Randy McCord, and it'll pop up. And I think it's a whole $7.95 on Kindle, so cheap.
Excellent. Get that. Get a notebook, or go and get some poster board. If you want to make a vision board out of it, do something with it. The greats out there, we see Tony Robbins, we see Jack Canfield, we see the greats out there, and they all talk. So this is literally a blueprint or a playbook to creating proper vision of where you need to go and what you need to do.
I originally wrote it for our advisors and for people in our industry, but you could apply the same concepts to just about any entrepreneurial endeavor. It doesn't really matter.
I'm going to go and get one of those books, Randy. I'm pretty excited to take a look at it.
It's a little dated now. I'd make some changes, I think, if I did another edition, but I think you'd enjoy it. I think you'd like it.
Excellent. Randy, thank you so much for sharing your time. And I know that this information is going to help somebody set up their business, their brand in a better way.
Perfect. And Kim, I do want to thank you for this opportunity. It's great to be a member of a petroleum club because we get this opportunity as members. And again, one of the great things that we talked about are the mixers, and certainly what I really like to see the club doing, which is what I'm so impressed with, is how they've brought in young professionals. I'm an old hand. I'm a good guy.
Both, Randy.
I'm a good guy to know because I've been through the trenches, right? Like I got a lot of experience. I'm a good elder to talk to. But there's a lot of young folks in the club now that are bringing new energy, new businesses, new concepts. They're even teaching this old dog to some new tricks with regard to business, and the club's very vibrant now. And
it's pretty cool, to see that.
It's really
a lot of things. A lot of things did not do well during COVID, and then we had the recession here in Calgary previous to COVID, and yet the leadership in the club is crushing it. They're thinking with an entrepreneurial mindset. How do we pivot? How do we shift? How do we grow? Who is our audience, and how can we serve? And I think they nail it. They are constantly doing something.
I wish certain levels of government were to look at the decision-making process. The club did a massive renovation on time, under budget.
Yep. And during a recession here in Calgary.
It would be so nice if government were occasionally to take some notes from their business brethren and work using our tax dollars in that kind of way. As I say, I've been a member of the club since almost 10 years now, I guess.
Wow.
And it's been great, and I really appreciate this. Thanks so much.
Absolutely.
Thank you for joining us today on the Back to Business podcast. Be sure to visit calpeteclub.com, CALPETECLUB.com, to find out more about upcoming events, networking opportunities, and membership. If you are not already a valued member at the CPC, where we are proudly connecting and supporting Calgary's business leaders.